Point 2, how do we test accrual accounting? This is really simple. Show people a P&L. What you're looking at here is just the very top part of a P&L where we have sales, and underneath we're deducting cost of goods sold in order to get to a gross profit of 200,000. So we would ask salespeople, not any non-finance staff, what does the sales number represent? The sales of 500,000, what does this represent? And I will tell you the answer that we hear from most non-finance people. We hear this number represents the money that came in over the period being, I guess, up to maybe the first 6 months of 2024 or something. This is the money that came in during the period. Now, the P&L does not represent the money that came in during the period. And this is the principle of accrual accounting. Accrual accounting says we record on our income statement or on our P&L the sales value of what we invoiced in service, not money that was received. And so many non-finance staff don't realize that when they're looking at an income statement and they're looking at a P&L, because of the principles of accrual accounting, this is not money. In fact, maybe zero of this even came into the bank account. What do I mean? Maybe you made a sale for $500,000 and all of that is yet to be collected. Maybe it's all sitting in debtors, okay, because the customer hasn't paid you. Do you put it on the income statement even though you have not received even 1 cent of that money? Yes, you do. You record the income received, the amount invoiced on the income statement or on the P&L, even though no money might have come into the bank account. And this is how the principles of accrual accounting work. When you're looking at a P&L, you're looking at the amount of invoice service, the amount of service invoiced. You're not looking at money received in the business. We don't know if all of this was received, if the whole $500,000 was received, or zero of this was received, or any percentage of it. We would have to look at debtors on the balance sheet in order to understand what is still collectible. And this is the principle of accrual accounting. Same with here, with the cost of goods sold. What does this represent? What does this expense represent? Because you see 500 minus 300 equals 200. So what is the cost of goods sold? This represents the value of goods you sold for $500,000. What was the cost price to you as the business? Did any money leave the bank account when those goods were sold? No. So why are we expensing it? Because expenses simply mean usage. It doesn't mean any money left the bank account. It just means we used up something. So what did we use up? We used up $300,000 worth of our product or worth of our goods, which we don't have anymore as a business. That is gone. It has left us. It's left our shelves. And at that point, when those goods are used up, that is when it hits the P&L. And asking these simple questions and just showing a sample P&L to non-finance staff and asking them to explain, what does this line item mean? What does that line item mean? Will quickly give you an indication whether they understand what accrual accounting is. And accrual accounting is key to understanding, to being financial literacy and having commercial acumen.